Hi, this is Joe Rabil with Rabil Stock Research, and we're going to do a stock talk today that's a little bit different. I want to discuss in detail MACD and ADX, and I wanted to give a little bit more insight. Since I talk about these all the time, I want to make sure I start from the beginning and maybe give a little bit more detail into how they're calculated and why I think it's important to use both of them together as opposed to just one versus the other. So let's go ahead and get into the agenda. So again, I want to look at how these indicators are derived, and I think it's very important not only for ADX and MACD, but for all indicators. You want to know how these indicators are being derived. And the reason why you want to know that is because you want to figure out how much lag there's going to be and what is going to cause the lag. So in the case of an ADX, just as an example, when the volatility expands, there's going to be more lag in that indicator. I'm going to get into that in a little bit more detail, but I wanted to make sure you have just a little bit of an understanding that each indicator has its own weaknesses and its own strengths. And so I want to cover these two very important indicators together today and talk about, again, how they're derived, talk about how the difference between the two and also how they complement one another. And then I want to get into the specific signals I think are key for each one of these. Before I get into that, my services can be found at rabilstockresearch.com. I send out about 2 to 3 reports each week, focusing in on trying to identify individual stock ideas, but I also look at the stock market indices as well as the sectors. If you're interested in trying the service, you can use this coupon code StockTalk. And you can get the first 2 months for $50. So we're going to go ahead and get into this discussion on the MACD and ADX. So first thing I wanted to do is talk about how they are derived. And the reason why this is so important is that, where I want to focus in on is price. Okay, and I've said this a lot, but this is basically a mathematical reason why we want to use price as our main key. It should be the driver behind everything we look at. We should also always look at price first. We should look at price, and then we should use the indicators to complement price and confirm price. So that's one thing I just wanted to start with, and I actually put that above the source. I mean, normally you say, okay, here's your source. We start with price, and then we work our way lower to the first derivative, second derivative, third derivative. But I wanted this to stand out because I want to make sure I get this across, and that is whether we're using the open, high, low, close. I mean, yeah, some of these indicators use the high and low, others use the close. But I think it's key to recognize how important price is in the calculation from a mathematical standpoint, because we can't get to these other indicators without price. So I always start with price, whether I'm looking at a price chart or when I'm starting to look at these indicators, I'm recognizing how they're being derived. So these are my source. So we're going to go to the first derivative. The first derivative means that you're only doing one calculation to get to using price. You're using one calculation. Now, on one side of the equation, we'll start on the left side. We've got the moving averages, okay? And the moving averages are just using the close. They don't look at the open, high, low, close. Now, there are some moving averages that use some of these, but I'm just talking about your standard issue closing line moving average. And that is using a closing price to calculate it. And especially the moving averages that I'm going to look at with reference to the MACD, because MACD lines use moving averages to calculate. The MACD line is going to use moving averages to calculate it. So we're starting with the close, and then we go to the moving averages as a first derivative. So we're taking one calculation and we're getting to the moving averages. Now, on the DI line side, we don't look at the close. We don't look at the open. Okay, we're only looking at the high and low. And for the positive DI, we're looking at the high. And for the minus DI, we're looking at the low. So these aren't even taken into the calculation here. So I've got the high and low. And I'm creating a calculation for DI. Now I use a 13 period DI line. So it's taking the last 13 highs and 13 lows to create these lines. But so it's a first derivative. And the reason why I wanted to lay it out like this in a flowchart manner is I want you to understand that every time you take a mathematical equation and put it on price, there's going to be some lag. So we start out with price, that's our source, and then we move to our first derivative. Now, in order to get to the MACD line, we have to have already done a calculation, and now we're doing a second calculation to get MACD. And so we're taking a moving average of the moving average to get the MACD line. And then for ADX, we're doing the same thing. We're taking a moving average of the DI lines to get a difference, or to get the signal for or the current level of the ADX line. So that's a second derivative. So now we started out with price in some way, shape, or form. We did one calculation to come up with these, and now we have to do a second calculation to come up with these. And then just to throw it out there, there's a third derivative for the MACD signal line, because you can't calculate the signal line until you have the MACD line in place, and you can't calculate the MACD line in place until you have the moving averages. So, I think once you start to look at it this way, I think it should make sense to you as to why these indicators, they have some strengths, they have some weaknesses, but there's always going to be a lag relative to the price action. Because they give us readings at prior highs and prior lows, they actually can have a leading edge component to them. I'm going to show you that as I get into the chart side. So, but I wanted to make this crystal clear that we start with price, we work our way down, we get a first derivative, we get a second derivative, and a third derivative. So the ADX line and the MACD line are second derivatives of price. There's a couple calculations that are being involved. They're not going to necessarily be really quick, especially when we start to see more volatility in the marketplace. Let's go to this next chart. So I want to see the differences in the calculation. As I mentioned, there's no high-low involved in the MACD, and there's no close involved in the ADX or the DI lines. But I did want to spend a minute. I think most people know how the MACD lines are calculated. You're taking the difference between the 1226 exponential moving average. At least I'm using the standard issue. I am looking at MACD standard issue 1226.9. I use Gerald Appel's original work. I don't try and reinvent the wheel. Now, I have adopted the settings on ADX that are a little bit different than the standard issue. I adopted Dr. Charles Schaap's settings from his book AD Excellence. I like to use the 13 for the DI lines and an 8 for the ADX. And the reason why I use the 8 is because I want it to have more peaks and valleys more often. I like to compare prior highs and prior lows. And the 14 line, when you're using a 1414 ADX, it can be a little bit slower. But what I want to do here is I want to show you I want to just make sure you have a crystal clear understanding of the DI lines and how they're calculated. So I'm going to start here. I've got this green line. I'm going to highlight here. And that's this high. And then if we make a higher high, that's the difference between these two red lines that I have just drawn. The difference between those is positive DI. Okay? So I'm looking at the move from this peak to that peak in one bar, that taking out that high, and how far do I go above the prior bar? That's positive DI. That's real strength and power in the move. Whereas we make a move up here, and if you notice, we had kind of like a flat day where it just went sideways. There's no real positive DI here. But then the following day, we have this high and then this high. And the difference between those two bars, the two highs, is your positive DI. Now let's look at this. We have this here, this low and this low. The difference between those are a negative DI, whereas the following day we don't really have negative DI, or this following bar we don't have negative DI because we didn't make a lower low, and then we had more negative DI here between here and here. So once you start to understand how these are calculated, realizing that the close really doesn't matter. You could have a really big bar to the upside so you make a higher high and then you close down like this, and it's really not a great day, but it's a positive DI day. So sometimes we'll get a big spike in the price action and it'll close at the low, and the stock will actually have a horrible day, but it'll affect the positive DI in a very bullish manner and make you think that the DI line and the ADX line are really bullish. So that's why, again, you have to know how they're calculated, to sometimes you want to ignore them. So I thought it was worth spending a few minutes going through this in detail so that you could see how this progresses to the upside. When it comes to MACD, we're looking at the closing price and we don't care. So we could have a really big bar and have a move that closes here, and then have another huge bar to the upside, and then it closes like that. And MACD is going to show, it's just using the move, it's using the closing line for the calculation. It doesn't really care that this big move took place. So when we get a lot of volatility, ADX tends to lag, more so than any other indicator that I've seen. When we get massive bars, when the bars really have huge movement in them, and that usually happens at a bottom, you have to kind of discount the ADX a little bit. We're going to get it's going to be a lagging indicator. It's not going to give us signals that are early. They're going to be more late. And so you got to use that to your advantage. Know when to use this indicator and when to kind of switch it off and go to price. Look at the fib levels, look at the moving averages, even look at the DI lines. The DI lines are going to be a lot more sensitive than ADX at bottoms, because we're going to have so much volatility that the ADX calculation is going to take a little while. Okay, so I want to switch over to the individual charts now. And I want to make sure I spend enough time. I'm going to use Microsoft, but I want to go through and just look at some of the things that I'm looking at with respect to how these indicators can be a complement to one another, and then look at their key, I think, the key signals that I look for. Okay, so I want to start with the 4 charts up, my 4 time frames: monthly, weekly, daily, and hourly. And I want to do this for a specific reason. The way I like to teach these indicators and really just looking at the market, I want you to learn price, I want you to learn trend, I want you to learn the moving averages, the MACD, the ADX, and the volume in a single time frame. Learn it in one time frame. Be able to recognize what's going on in one time frame, and then we start to apply it to multiple time frames. And all of a sudden, I think your timing is going to improve dramatically. If you understand that each time frame has its own trend and its own momentum, then we have a pretty big advantage if we're looking at 4 different time frames at the same time. So I wanted to make sure I started with that. But let's go ahead and just focus in on the weekly chart right now. And I want to start with the ADX. And the reason why I'm going to start with ADX now is because for me, when I'm going to look at what stocks I want to play, I'm using the ADX to determine that. So even more so than the MACD. Now, the more trading oriented I become, the more I'm probably going to lean on the MACD a little bit more for actual signals, because I'm going to have a fewer list of stocks. If I'm trading, I'm going to have a fewer list of stocks, and I'm going to be zeroing in on specific characteristics that are taking place. And MACD has some pretty nice signals from that standpoint. But when I'm looking at patterns that I'm trying to identify that look like they have some potential over the next 3 to 6 months or longer than that, I'm really zeroing in on the ADX. And that's my starting point. I'm looking at price, and then I'm looking at the ADX. And so I wanted to make sure this came across. So these stocks are helping me. I mean, this indicator is helping me with which stocks to play. Okay, the ADX is helping me with which ones. And then the MACD is helping me with the timing of the ones that I'm interested in. So I don't want to confuse things and say, go screen for this and go screen for that. In other words, go screen for MACD signals and go screen for ADX signals. I like to look at big lists of stocks and then use the MACD and ADX along with that. But if I'm looking at a list of stocks that says 100, 200, 500 stocks, I'm looking at the price action and I'm looking at the ADX, and I'm trying to figure out, can I take that list of a couple hundred down to say 10, 5, 10, 15, or 20 to a workable list? And the way I'm going to do that is I'm going to look at the ADX line. And there's two things that I'm trying to find with ADX. I'm just going to draw it up here. So number one, I'm looking for, here's the 25 line. That's this line going across here, right here. Is I am looking for an ADX that's been low for a period while price has been forming some kind of a pattern, normally like a sideways kind of a rectangular type of a look, right? It's a consolidation pattern. Now, sometimes a consolidation can be a triangle like that, and other times it can actually be an ascending triangle where price is actually doing something along these lines, right? It's making flat tops, but it's making higher bottoms. And if you have an ADX line that's low, that's set up like that, then we can look for breakout patterns in price. So that's one thing that I'm trying to do, is I'm going and looking for all the stocks that have low ADX, really are not. And let's just go back in time on this one. In fact, yeah, it actually goes back. It's a little nuts. Let's go ahead and look at the monthly chart because I think it's a little easier to see. So we went through an extended period on the monthly where the ADX was below 25. We had this one little pop here, but for the most part, over the course of about 10 to 12 years, the ADX was below 25, below this 25 line. And then we started to break out, and you can see it a little bit better in price as I move up here. We basically had this move. We had this decline in the bear market of 2008, and then we came back up, and breaking out here to the upside was really the kickstart move that got the ADX going above 25. So that dates back to 2012, 2013 time frame, and really since that time, this stock has just been an amazing performer to the upside. So that's one side of the equation, and I'm looking for when the ADX is low. Okay, I'm looking for periods where ADX is low. I'm writing down those stocks, and I'm looking for where there's a potential breakout pattern that could be occurring. And then on the other side on ADX, I'm looking for where the ADX is really strong. So if we zero in here, see where the ADX crosses above 25. So this dates back to 2017. If we start looking at this, we get this move where ADX is really kicking into gear and showing a lot of strength. And on the pullbacks, it's even holding above 25. And when that's the case, we're looking to buy pullbacks near the moving averages. I want you to also notice that the moving averages are moving up at about the same rate. They're both rising. They look almost parallel. So for periods like this, where we have a lot of strength in the ADX and we're getting regular pullbacks to the moving averages, that's really where I think that ADX can come in really handy. You can go looking at stocks, and as a way of sort of screening them down to figure out which ones you want to be playing, you go look for the ones that have strong ADX that are pulling back towards the moving average. So that is one thing that I definitely like to look for. Now, there are periods where you go through a little bit more of a complex correction in the ADX, and it'll drop down below 25, and that's okay. We want to just measure the ADX on each peak. Every time you make a new high, make a real new high in price, we want to make sure that we're making a peak above this 25 line. And as long as that's the case, the trend is to the upside. Now, when we get the more extended declines or corrections that take place like this, where we get more of an ABC decline, a lot of times the ADX will go low again. And I like to look for, so during those periods, I'm going to go look at the MACD line to see if it can give me some kind of insight. Because what I want to do with the MACD line is help me in the timing. On my pullback trades, the MACD is going to play a huge role in helping with the timing. So if we look at the periods where this is pulled back, so MACD was a little overdone and it worked its way back down to the zero line here. This was another period where it moved up and worked its way sideways. It came back to the zero line here. Another time where we came back to the zero line here. I mean, these are pretty legitimate pullback plays that are a little bit more than just a simple pullback to the 18. They have a little bit more complex nature to them. And when that happens, we can focus in on the MACD to really help us with the timing and tell us about the strength. The MACD is, I think, is telling us as long as the black line, the MACD line itself, is holding around this zero level, that the bias is to the upside and the long-term trend is positive. So, you know, if I'm looking at MACD from that standpoint, and I'm saying, you know, I can actually look back from a historical standpoint and use it as an overbought, oversold oscillator as well. How far above or below are we getting to the zero line? The farther away, the more risk there is. Now, if you notice what's taken place, we've gone to a whole new level, highest level this stock has ever seen when it comes to MACD to the upside on a MACD basis. And when that happens, but we're holding we keep getting pullbacks, regular pullbacks to the moving average lines, and the moving average lines are moving up at a pretty, you know, standard rate, not going crazy. Then I think we have to change our time frames. So if I go and I look at, that's the weekly during that period. Now we go look at the daily chart and look at how we're getting these regular pullbacks to the zero line area on the daily chart. So this is why I like to use different time frames, because there are times where you'll jettison away, like you have recently on the MACD line versus its signal line, or versus its zero line on a weekly chart for Microsoft, but you get regular signals on the daily chart. So we're actually getting another one showing up now. We're working our way back down towards the zero line, and the ADX has started to move low again. But if we compare the last peak, so if I go up and I look at the last peak, this is the last peak in price and the last peak in ADX, very strong, good confirmation to the upside. If we go back to this peak, look at this peak in price. Look at how strong the peak was based on the buying, based on the green, is showing nice strength there. Look at this peak, again, based on the buying, because green is on top. It's based on the buying. So we're moving up. Price is being confirmed by the ADX. Every time we make a new high, the ADX is making a peak, and it's being confirmed by the buyers. When green is above red, this blue line, and they separate, the blue line is going up based on the buying strength. Okay? So that's something we have to factor in. If selling becomes stronger like it does here, now all of a sudden it's going up. This ADX is rising because of the selling strength. But every single time we've made a peak, we've gotten confirmation on an ADX basis. So I think these are key things that you got to keep an eye on. Now, there's a couple indicators that I'm looking at, a couple of patterns that I like to look for. And I'm going to use this as this is the pattern that actually was the last pattern that was in my book. And it's this pullback here. We're getting a pullback to the downside, and we've had a confirmation of ADX on the upside, and we get a pullback that has not a lot of strength in the sellers. The DI doesn't cause the ADX get above 25. It just moves. It moves its way up, but ADX stays below 25. And notice how the MACD holds the zero line. So I think this is a key pattern we want to be on the lookout for when we're going through a corrective pattern, an ABC decline. Look for zero line reversals right here with low ADX. Okay, it's a great combination that I think can be a very useful tool. So here's another one, low ADX right at the zero line, MACD zero line. And we have a price pattern that's more of a sideways consolidation, but it's the same concept. So if you learn this one thing out of this, it's looking for MACD signals, turns at the zero line when you have low ADX, and understanding that when a stock is declining, the ADX will have some lag to it. Normally when there's violent selling, and we get a pretty decent sized sell-off in the stock, like we did on this move here. So let's just take a quick look at this to finish this up. Look at how violent this decline was. The ADX is just too slow. It's not telling us anything. It's declining. The DI line's going up. The red DI is going up. So just factor this in when you're looking at these indicators. Hope this was helpful. So we've run out of time. Thanks for joining me. Please feel free to reach out. My contact information is listed. And also send those stock requests to stocktalk@stockcharts.com. Have a great week, and we'll see you next time.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.